This is our Forex blog for April 28th, 2011. And like most days, we really want to buy the strongest pairs versus the weakest. And in a perfect day, the highest probability trades are when the daily, weekly, and monthly trend, which is right underneath each of these pairs, is just the dollar, the yen, the euro, the Swiss. We have the real-time statistical strength on top. Red's weak, green's strong. Anything at or above or even close to the white line is very strong or weak. And underneath that, we have the daily, weekly, and monthly trend. The dollar is one of the weakest currencies, and the CAD's the second, and the yen weekly and monthly trends also weak. But we had a counter trend day to day. So, if you see a currency that's been weak over the last few days, weeks, or months, they don't go up or down forever. And you can see that today the yen was stronger than the dollar. So if you're going to trade one of these counter trend bounces, you're better off trading the yen versus a dollar, and then trading against one of the ones that's the weakest. If the CAD shows some weakness earlier and the daily, weekly, monthly trend's down, you're better off trading one where its longer term trend is down versus another one where its longer term trend is down. And the New Zealand was less strong than the Australian, so looking for New Zealand yen shorts, CAD yen shorts until 3, and then again around 7:30. We'll start with the CAD yen. Weak CAD, oops, hold on a second. Weak CAD, strong yen. And one of the patterns on this chart is our NR7 pattern, which means basically during the previous 4-hour range, price moved less than it did over the previous 7 4-hour ranges. That's the previous 28 hours. And so when you see one of those breakouts, if they're above the hourly, if you might have bought right here, you would have had a small loss as it came back down. It breaks out through the low, you get short. You might have got out of that also with a tiny 5-10 pip loss. And then when it broke down again, you can see it trended nicely down 30 or 40 pips. You might have shorted this little counter trend move against it, shorted the counter trend sell signals right here, because we're still underneath that area. And you got a huge move to the downside after that. Another one, like I said, that was weak today was the New Zealand. So put the New Zealand on here. Strong yen and weak New Zealand. And the price is underneath the hourly right here. It's kind of chopping around, and when it breaks down, you got a nice big move down. And basically, anytime you see a lower low be made, usually you can short the next retracement up. It retraces up, breaks the trend line that you draw underneath the lows, and price falls 30 or 40 pips. You can see extreme weakness here. Again, another pullback up, kind of goes sideways. As soon as it goes down, our IntelliTrend bar is going red, you go short again. And here is the fib level. That is a very likely high probability support area, and that's where the market kind of stalls. This makes an excellent place to look to get out of your trade. And if the weakness wasn't so much right here with the double bottom, you might have even considered going long. But I would never do so if that wave down had incredible weakness like you saw here. Again, very strong yen. The pound also had brief amounts of weakness, so at 3 you could look for shorts, 5 in the pound yen. Oops, hold on one second. Here's on a chart, a purely chart pattern, price was working its way up, ran out of steam way above the upper containment band, went sideways, broke underneath the hourly. This is a decent place to go short. You would have had a small loss there, and then it came back up and fell underneath the hourly again. The yen was already strong before that, and then it began its trend down. Had an incredible weakness right here, and so on this little tiny pullback right here is a decent high probability trade, and it came down to the previous week's high and found major support for many hours. So you might have also given this a short right here. 20-day moving average, once broken, becomes resistance on the way up. Excellent trade there as well. The euro also had brief amount of weakness coming up to around 6:30 till about 9, and so you could have also traded the euro yen short. And also, once price breaks underneath the hourly, it's more likely to go down. And so when it's above hourly, it's more likely to trend up. When it breaks the hourly, this little pullback right here, it came up and retested it. Decent place to go short, decent place to go short. Couldn't get back above the hourly here, decent place to go short. That one really just took off and fell, 75, 80 pips down, and pulled back up here, another pullback trade, short again. Now it double bottomed right there. That's probably the low of today, and you can look for pullback trades now to buy.